The revenue recognition principle allows us to determine the accounting period in which revenue and expenses are recorded. In accounting there are two possible bases for recording revenues and expenses. These are the cash basis and accrual basis. The main difference between the two is the timing of when revenues and expenses are recorded. The cash basis of accounting records revenue when cash is received and records expenses when cash is paid. An example of a cash basis accounting system is your personal bank account. Revenues such as wages are recorded only when you are paid, and expenses such as your credit card are recorded only when you transfer the money. In contrast, the accrual basis of accounting records revenues when they are earned and records expenses when they are incurred. This is an application of the revenue recognition principle and matching principle, so it is also therefore the required method by the general accepted accounting principle. Now that we know that we must use the accrual basis of accounting, let's take a look at when revenue and expenses are recorded by looking at the following examples. On the 1st of May you receive money for a wedding, but it was not until next month that the wedding was actually held. This is known as a deferred revenue, as cash was received before the revenue was earned. In this case revenue should be recorded in June, not May, as it was during June that the actual service was provided. Let's say you help your friend mow their lawn while they were away and you receive the payment the following month. This would be known as an accrued revenue, as the service was provided before revenue is received. In this case revenue should be recorded in the month the service was provided, as that is when the revenue was earned. So now let's take a look at a summary of the concepts we have just learned. In accrual accounting, revenue is recorded when earned and expenses are recorded when incurred, and when cash is paid in advance it is known as a deferred revenue, but when cash is paid on a later date it is known as an accrued revenue.
Created using Powtoon.